Good morning. It is Sunday, August 6th, 2023. All right, let me go on to YouTube and make sure everything runs correctly. And then we can get going. All right, looking good. I hate having to do this each and every time, but with my luck with YouTube, every single time that I skip this, I have technical issues. So it is what it is. All right. I'm gonna try to keep this stream short because I think it's gonna be very similar to a lot of stock, especially if you look from sector to sector. So it's almost better off to talk on a broader term. No doubt we have one of the ugliest, if not the ugliest week of the year. For me, for sure. And I wouldn't be surprised if everybody had a very bad week in general. Let's go right to it. QQQ, the NASDAQ. Okay, look, we have had a great bull run. Amazing bull run. In fact, since March, we had the QQQ was at 285, 286-ish. Yeah, you can do the math, right? One of the most amazing 4 months run in the history of the QQQ. No doubt about that. Some people even talk about this is reminiscent of 1999 as far as the fever, the FOMO into AI, right? This have a huge impact on the psychology of the market and the consumers. You hear about the wealth effect often, very often you hear about this, but if you can't relate to how the consumers, the economies did over the past 4 months with this move, then you have a disconnect with reality. Sure, was I bullish on bond going from the end, like October of last year? Absolutely. I was bullish on bond because I see a slow economy. We hear layoff news from November through January, right? Even February. But then you get the AI fever. Everybody started to talk about AI, and you get this. Keep in mind, consumer did slow down as far as car buying, as far as home buying. That's why you see the CPI came down in the last 4 months. But certainly it did not come down fast enough or big enough for the Fed to pause. You can't blame the Fed. As much as I dislike Powell because he cannot use data that is not lagging data and focus too much on lagging data instead of data is not lagging. This is the cause, okay? Doesn't matter if mortgage rate is over 7%. Doesn't matter if used car loan rate is high. People still shop. And that's what we got. We got one of those situations where the Fed hand is tied. And for that, I cannot blame the Fed for being stubbornly focused on cutting inflation. All right, so now what? Now, okay, first of all, forget the 20 MA. Okay, sure, the 20 MA was support. Okay, the last time it violated the 20 MA, of course, was back in April. And then after that, we have 3 months, which is remarkable. Now it violated, right? So what would be the reason for the sentiment to shift where it's gonna bounce up. I just don't see it. Okay, I just don't see, unless I'm missing something. I just don't see a reason why the Nasdaq is gonna pop above the 20 and resume the march higher. So be careful. Um, Certainly, the 20 was critical. The gap fill was important. But next up, well, next up, the path of least resistance, in my opinion, is of course down. Where? The 50 MA. Would I nibble to make it simple instead of like trying to pick the right stock? It's almost easier to just buy the QQQ if you wish to nibble the QQQ, right? If you want exposure in tech, instead of like trying to pick the right one as far as Amazon or Google or Meta or Nvidia, yeah, you can do that. But I would say wait to at least the 50, because if it fill the gap, it's not even 1%, okay, to get down to the 50 MA. And can it go beyond the 50 MA? Why not, right? Why not? So as always, we go one level at a time. All right. So if we get to the gap fill, then we focus on the 50 MA. And if the 50 MA doesn't hold, then most likely we look at 357. Why? Because that's the area that it break out and come back and check back. Okay. So just keep that in mind as far as a QQQ. And you can look at the same thing with, mainly the indices, SPY, same thing. Okay. Not exactly the same, but no doubt you can see that the last time it violated the 20 MA was way back in May. And then it had an amazing run, bounced off nicely, and now it violated the 20. Okay, so once again, what would be the reason for SPY to get back over the 20 and resume? Earnings season is, I would say, 3/4 done. So I don't know. Okay, I don't know. I will talk more about other forces in the market that make it more likely that the path of least resistance to equity to go lower. Okay, so for now, same thing here. I think the gap fill pretty much can happen, right? And then of course, if we fill the gap, then yeah, the 50, easy peasy to think, right? Easy peasy to think. And then just like the QQQ, okay, the area that I think is easier to buy and safer, of course, is the 100 MA, right? We had a massive run, and if you do draw the Fibonacci retracement, let's do that. Let's do this real quick, just to have a talking point. Add drawing, okay. For 59.44. There you go. There you go. The 50% Fibonacci is roughly around 420, right? So yeah, to me, I like buying down here into at least the 100 MA. Sure, 50 would get your attention if you want to scale in the position. Do that, but that's where you want to back up the truck, okay? Of course, just because I say I would back up the truck on the QQQ and the SPY, if I see the 100 MA, does not mean that I will do it. It's all depend on how it get there. That's one of the things that you hear me talk often. How it get there matters, and why it get there matter. If it drip lower, if it's smashed lower, it all depend on why it got there and how quickly it got there. But I like it. I like the risk reward, especially if you have a long-term horizon. Whenever I said long-term, I mean at least 6 months, okay? 3 months is not long-term. 3 months is short term. 6 months debatable, but if you have a year horizon, if you buy something a year out, you likely make money. Okay, that's my long term stand on why I use the word long term. If you buy down here long term, a year from now, from the 100 MA, likely it will be higher. So the DIA, the Dow, stronger, okay, stronger, but I think it will violate the 20. And if it violates the 20, then same thing. When you look at the 50, all right? So right now, I would say equity is the last thing you want to add. Cash is still king. Let's talk about TLT. Ugly, okay? No doubt, I thought for sure 98-ish will hold. Boy, was I wrong. And that hurt me the most last week. Well, this week, well, last week, yeah. Now, what is next for TLT? Is the bottom end? Maybe. The last time that TLT got down here, okay, let me remove this thing so that you can see. Remove drawing. Can I remove? Well, I can remove the alert. How do I remove the alert? Well, anyhow, let's just zoom in this. Okay, as you can see, the last time it came down to this, there was 2 days of violation, and then it did one of these, and then boom, it run, right? So as ugly as TLT is, and it was ugly, this move right here, this 2 weeks decline right here is no less ugly than this right here. So using the same playbook, you know, I would not mind, and I did, sold a whole bunch of course I lost money on my puts. I've sold a lot of puts, 98, 97, 96.5, and 96. Thankfully, the 96 made money. The 96.5, of course, I closed it out earlier. Then I think some of them make money, some lost a little money, but that's not a big deal. Where I lost money was, of course, the 98 and 97.5. I have sold plenty of puts at 94 and below. So give or take 3 weeks from now, that should be fine. I'm not, the loss here will be fully, I can recoup within a month or a month from now. First week of September, that's about as far. I was sold put spread as far as the first week of September, but I also sold put spread at the end of August as well as next week, right? So I spread out my risk as far as time horizon, but the spread was sold between 94 down to 93, and I think it's be fine. I'm not. Other losses is more painful than this. This loss is painful, but if I have to put my confidence in recouping the loss here, it's high. Okay, now this part of this is what concerned me about the QQQ, right? There has been a disconnect with the QQQ and TLT for some time. Higher rate is not good for tech, but technology, the NASDAQ has avoided high rate this past 9 months, especially the last 6 months with the AI fever, right? So just be careful. Also be careful with banks, okay? The fact that banks, KRE, is strong is kind of scary. If long-term bond are getting smacked, and part of the reason why TLT got smacked, there's a combination of many things. Of course, the Bank of Japan changing the way they want to control rates. That's one thing. Strong economic data is the second thing. And number three, when you have big boys, big hedge fund talking about shorting bonds is the easiest thing to do. Last week, You have Bill Ackman come out saying that he's short bonds, and then you have Elon Musk talk about the same thing. Elon Musk also came out in agreement with Bill Ackman that shorting long-term bond is a no-brainer. Now, the only one that came out after those kind of bearish stand was Warren Buffett. Thursday night, Warren Buffett came out and he said, I'm not scared. I bought 10 billions. I think, I could be wrong, but he mentioned he bought like 10 billion the previous day. He planned to buy 10 billion next week, blah, blah, blah. And Warren Buffett is right, okay? One other thing about treasuries, as far as buying treasuries, compared to TLT, the benefit of owning treasuries outright is if you buy a 1-year treasury at a discount because rate is higher, in a year when the treasury mature, you still get your full amount, okay? So you didn't lose any money. Sure, there could be unrealized loss on your principal of your treasury, but when it mature in 3 months, 6 months, however the duration of the bond that you're buying, you get the full amount. That's the benefit of owning treasuries outright instead of buying like an ETF like TLT. Okay, so if you can buy short-term treasury outright, doesn't matter if rate go up or down. If you buy a 3 months treasury right now and get 4.5%, it doesn't matter if rate go to 5%. In 3 months, you get the full amount plus the 4.5%, right? So that's what, of course, Elon Musk and Bill Ackman are saying. They're saying they are shorting long bonds, buying short bonds, okay? That is perhaps the biggest contributor to TLT going down short term, because they believe that strong econ data will force the Fed's hand to move. Part of the fear is the Fed doing more than one. If the Fed say, if the market is saying, okay, the Fed is going to raise rate again in September and then be done, I don't think TLT would behave so poorly. Part of the sentiment right now is that they are not done after September, right? And I don't think that many people talk enough about that on CNBC or any other financial station. That's the fear, and that fear it have logic. Okay, why? Have you followed oil? Okay, inflation has been coming down, although not fast enough. But if you pay attention to what oil has been doing this past 6 weeks, yeah, that's not good. Have you paid attention to what's going on at the gas pump? Yeah, it's easily 10% higher. If you paid attention to how much you pay for gasoline at the pump, I know I have. It is definitely 10% higher than it was a month ago. Okay, so that's not a good thing. It is not a good thing as far as inflation. Energy has been a big contributor to falling CPI. It has. But the last thing that we want to see is this, right? Sure, I was bullish on USO down here. For those that follow me, I always said it is a no-brainer to sell spread or own USO outright down here in the 62 or below level. Okay, no-brainer. Even 63. And I said that it's time to sell when you get into the 70, right? But this continued strength, not a good thing. And the longer this stay up here, you're gonna have problem with the CPI. And if the CPI stop falling, let me repeat this, if the CPI stop falling, the Fed is going to do another one of those, we are vigilant on getting the inflation rate down to 2%, and that's our mandate, blah 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 blah. Okay, that is what scared TLT. All right, that's what many people, in my opinion, that went short on TLT is thinking, because they see this. Okay, it's not a coincidence that the last 2 weeks, with energy spiking over a resistance, right? Because for a while, for a long time, if you go back to November of last year, okay, this is the area of resistance. It has sold off around 72, right? Yes, see, it has. And then all of a sudden, the last 2 weeks, okay, we have issues. We have issues. So be careful. And if rate go higher, it cannot be good for the NASDAQ. Okay, so if you take a look at any of the chart on whether it's Google, Meta, Microsoft, Amazon, they're all the same. Okay, they're all the same. The seven, magnificent seven, whatever the one people want to call, they all look the same. Okay, so be careful. Now is not the time to FOMO, chase into them, or buy the dip yet. There will be, but it's all depend on how energy is going to play out the next. I'm going to watch USO very closely. Okay, very closely. Outside of that, the one sector that got beat up that hurt me was, of course, Mac device. Yeah, what an ugly chart, right? Sure, the smart thing was trim. We did. And then who would have seen this move, right? Yeah. Can it go lower? Yeah. Would I buy more? Down here. Okay. Down there. But that was ugly, right? It's ugly. How far can it go? Can it get down? Well, if it break through the 3 moving average, and it can, okay, Abbott can do that. It has done that multiple times. If you can weather the storm, buying down here would not be a bad idea. But for now, this hurt me. Okay. Same thing with all of them. EW, wow, very disappointed. Okay, I'd be lying to say that I was bullish here. Hey, I bought here. I bought, I trim, I buy back, I trim, I bought, all that. Okay, so yes, I'm still have gained, but this took a big chunk out of the gain that I had down here. Not happy at all with this slide. But at this point, it is more about, is it time to add? And I would say just wait, no rush. Okay, it will be okay. 6 months from now, a year from now, will be fine. But short-term sentiment is ugly sentiment, right? So you can go across the board. The one that hurt me as well is, of course, ISRG. Ugly. This is just wow. Okay, slicing right through all kind of key support and reference low. Yeah, that can happen. Will it hold the 100 MA? I don't know. Okay, it's not ugly. Now the area that I feel safest is, of course, Lockheed Martin. Okay, I sold puts again and again and again. 435, 430, right? Yeah, I mean, it's not huge premium. It's 20 to 25 cents, but that's okay. That's all right. Okay, it's better here than many other area of the market, unless you want to talk about, of course, the staple. They falling apart too, right? I sold half of my Coke up here, and then I got stopped out down here, right? It's I still have a little bit. I sold half. I got stopped out on half of the other half, and now would I add down here? Yeah, it's that simple, right? It's can't be greedy. Pepsi, same thing. You heard me talk about selling up here, right? And now, if you want to sell put spread down here, yeah, I would sell 180, 175 using the, would I add Pepsi outright up here? Yeah. Okay. To me, if you want to nibble on Pepsi, if you see 181, 182, yeah, no need to buy up here. Buy $10 lower, right? CMG. This is danger. Okay, it's if you want to play CMG, play the gap fill, right? Play the gap fill. If you want to buy any share, I would say wait down here, right? In fact, I'm gonna put an alert right here. Create alert below. Buy the dip. Question mark. Okay, there you go. But if I get the alert, then I might consider throw in an order at 1800, right? For like a nice round number, buy at 1800. McDonald's, smashing earning, does it matter? No. Okay, resistance is clear. Resistance is clear, right? So yeah, and now you got violation of, yeah, it's violate a whole lot of stuff. So for me, if you want to do McDonald's, I'm gonna set an alert right here, ref low. That's why it's gonna, well, this line here, okay, hold on. This is key here because it's always, it's a zone, right? So you got a zone. Okay, if you want to do a zone thing, you can do this. Drawing. Okay, it's okay. Resistant, breakout, check back. So if you get back into the zone, and in a week, the 200-day moving average is gonna get up there. Okay, so right in the zone, I say 280-ish. I'm gonna create an alert. Below, buy the dips. Okay, question mark. There you go. Just be patient. 280. No need to pay almost 300 up here, right? You're gonna get your chance. You will get your chance down there. So I would say 280 down. If we get to 280, would I sell say 270, 275, 27 spread? Yeah, that might be a good play. Yeah. All right. Ugly day for the cybersecurities. Okay. I like cybersecurity. Was I wrong here when I said time to go? Yeah. It defied gravity, went up here, thing was all nice and good, and then you get this. Okay. It of course bounced off key support nicely, right? So does it mean that it's time to buy? No. Okay. Let's see what it's gonna do. Give it, when you have a big gap like this, give it 2 or 3 days. Let's see what happens. If it stabilizes, then perhaps buy a few shares, sell some put spread. Where? Ideally 200 or below, right? But for sure, I need to see that this will hold. Okay, so give it a couple days. CrowdStrike violating here. For me, I will put an alert right here. See, to me, that's another zone. Okay, this is where the gap down before happened. Okay, so it's a zone. It's always, okay, it's a zone. Support, resistance, you name it, it's all there. Okay, so you see it. Okay, it gapped down before, and then when it filled the gaps, it becomes resistant, right? Is that a surprise? No. And then it break out, and then it check back. So yeah, no need to, okay? No need to. I'll put an alert right here. When and if it get down to the 141-ish level. Okay. Or below by the dip. Right? So if the QQQ is going to revisit the 50 MA, I can I can say for certain that many of the stock, the tech stock I just talked about, is gonna come down. Okay. The only question is what magnitude are they gonna come down? Are they gonna have the same beta like the QQQ? So if the QQQ go down 5%, they're gonna go down 5%. But my take is the beta is higher than 1, right? For those that don't understand beta, beta is of course volatility measure. If you have a beta of 1 with a benchmark, that means that you go down, you match. Okay, you match. If you go down 5%, the stock go down 5%. If you have a beta of 2, then when your benchmark go down 1%, you go down 2%. So if you take a look at the stock, pay attention to the beta. Okay, if the beta is more than 1, if the beta is more than 2, that means that it's extremely volatile. Of course, beta, high beta equate to high premium on options. Okay, that's part of why certain stock have low premium on options, because they have low beta. Okay, so keep attention on the beta. But for me, I think with the CrowdStrike, now the one that of course created this mess was of course Fortinet. Ooh, there's nothing worse than seeing a 3-level violator. Okay, you're talking about take out the 50, take out the 100, take out the 200. When you taking out the 20 MA is short term. That's not good either, but it's very short term. But when you take out the 50, the 100, the 200 in one day, that is a total flip of sentiment from bullish to bearish. Oh my God, that is so ugly. If you want to be brave and buy at the gap fill, yeah, you can. Okay, you can. I wouldn't mind selling put spread down here, right? If it get down below 50, then yeah, it's a no-brainer, right? No-brainer. But that was ugly. But for me, I'm gonna put an alert, gap fill, okay? Lots of alert here, lots of alert. Gap fill. All right. Outside of that, of course, I think Target is earning is coming up. Be careful. Be careful. Okay. You can have another smackdown here on Target. Be careful. They have I can say with almost certainty that they have not solved their shrinkage problem. Same thing with OTA. Okay. Be very careful with OTA. I learned my lesson the last time. I did sell some put spread last week that expired, and I made money there. But now that earning is coming up sooner, I'm not gonna risk, because the gap fill is not that far below. It's not that far below, and if they come out, even if they come out with decent earning, but if they talk about how they still have shrinkage problem, you're gonna see another smackdown. Okay, and I don't see any reason why OTA or Target was able to solve the shrinkage problem. I don't see how. On top of the social issues. Speaking of social issue, Bud, not so bad. Yes, sales earning was hurt by Bud Light issues, right? And the bull came out swinging. Oh, see, it's not so bad. Um, it's not good. Bud had momentum. Let's make it very clear. When you come out and say something like it's not so bad, your stock is $10 lower than 3 months ago. Stop talking stupid. It's not so bad. Tell it to the people that paid 65 or more. Okay, it's insane to say, oh, for those that say go woke, go broke, you're wrong. No, they're not wrong. Okay, just because you still have small growth, albeit it's still growth, but you gave up a lot more growth. You wipe out 3 times more potential growth when your primary market went down, went negative. Okay, so no, it's silly. If you think Bud laying off a bunch of people, giving all kind of promotional discount is not a sign that it is hurting them and they didn't go broke, well, tell to the people that lost their jobs. It's nonsense. Okay, it's easy to say stupid stuff when you're not the one losing your job. Nonsense. STZ, for sure, topped out, right? I have my stop. Okay, I have my stop. Where? 266. Okay, I'm not giving up more. It was a nice pop, but I'm not gonna give up more than 266. If it's 266, I am gonna be. I believe my stop is for half of the share. But yeah, it was a great gain, and I'm not gonna give up. Okay, because basically 266 is pretty much near the high of the gap, big move up here. So I take it. Okay, sure. Would it be nice to sell $6 higher, $7 higher? Yeah, but hey, I bought it down here. Okay, it's been a great move. All right, now the other beer company, yes, Bud help. Bud failure help tap. Coors, Molson, absolutely. But come on, the stock went up 40%. Okay, let's keep it real. Right, over the last 4 months, it went from low 50 to 70. Right, so yeah, unless earning was smashing, which it was good. Make no mistake, earning was good, but it was not smashing. And so the stock took a beating. Now, would I buy TAP here? No. I have STZ. That's more than enough. Anyhow, enough rambling from me. Hopefully it gives you insight on my psyche as far as what I think about the market. I am very cautious. I think that's the best way to say it because I think what's going on with TLT, the longer TLT stay down here, the longer energy stay high. That troubled me a lot, okay? Because high energy will equate to inflation stay stubbornly high longer, which translate into TOT stay lower longer. Does not mean that TOT is going to go down to 85 or something like that. I'm not saying that because if TOT go way lower, you have a huge problem for consumer. Okay, TNX. Okay, before I go, TNX is a 10-year treasury. Okay, keep in mind it's not like TLT. This is the actual 10-year treasury. So unlike TLT, when rates go higher, TLT go down. It's an inverse relationship between bond price and rates. TNX is the yield. Okay, so as you can see, it is near the high. similar to the low of TLT, right? Look at this. Back in October, TNX got that high, okay? And right now it is over the reference high, going all the way back until that point, all right? So watch out, okay? This can be trouble for many things, because trust me, depending on where you are, the 30-year mortgage rate is back to close to 8%. Down here, it is over 8% already. There's many states that is roughly around 7.9%. But if the Fed raise rate in September, if TLT keep going higher, if a lot of mortgage rate use this, okay, use the 10-year is part of the measurement on why they charge a certain rate. They don't. 30-year mortgage is not correlated 100% to 30-year treasury. It doesn't. It is not, okay? There's no one-to-one correlation to any specific uh, duration of bonds, but it has more correlation to the 10-year than the 20 or the 30. So that's the reason why you see mortgage rate creeping to the 8% mark. And if you thought housing was expensive when it was 7, well, at 8% it can be good. Same with cars, okay? So it's not a good thing, okay? So it's tough. This make reading the economy extremely difficult, and that's what make it very difficult to determine the direction of the market short term. By that I mean in the next 3 months. I do think there will be a year-end rally. So yes, 3 months from now, when we enter in November, Santa rally likely will come. Okay, there will be a Santa rally, but the next 3 months could be pretty ugly. And need I say this before I end the stream? October, whatever is bad right now, whatever stock you have that is bad all year, it likely will be even lower in October when tax selling happen. Okay, the big boys that have a lot of gains in technology wouldn't hesitate to dump their losers to offset the gains in October when they had to close the books for year end. So keep in mind, a lot of people don't pay attention to why is October the worst month of the year. There's a reason. Tax loss selling by big boys. Okay, so keep that in mind. So if you have big losers, you might want to get out before they get out lower. Thank you for watching. Bye bye.